Hi, this is Cary with Wicked Stocks, bringing you a weekly SPY update. That's the S&P 500 Spider ETF, symbol SPY. I did record this video, by the way, for Monday, the week of Monday, September 20th, 2021. All of the charts you see are weekly bar charts, so all the levels I'm showing are good for the week of Monday, September 20th. Now, as you're well aware, if you've been following the videos the last month or so or two, you know there's a trend line I've been using across these highs. I'm not a big proponent of trend line analysis per se, but when they are over a longer term time horizon, this one is a year in the making, I begin to give them due respect. And this one at 460.43, we tested it a few weeks ago, at which point I was saying can contain monthly buying pressures, which has happened, and below which the market, once we test it, can quite easily fall back to 437.86, or in other words, that channel bottom. 437.86 is likely this week. We're just 3 or 4 points away from it. It can contain selling on a monthly basis, which is to say well into October trade. And once we test 437.86, the market can stabilize near term and push onward and upward to new highs, i.e. 460.43, rising weekly within 3 to 5 weeks. We could trade inside the 437.86 to 460.43 area through October and perhaps well into November trade. But if we close below 437.86, even on a daily basis, but certainly at the end of this week, and you do need to give it that 1% violation threshold. In other words, 4.37 south of 437.86 should be 433, 49. Did I do the math right? I don't have it on this video, but it will be a 1% violation. Subtract 4.3786 from 437.86, and that is the level. We'll just call it 434 or lower. It's probably a little higher than that if settled on even on a daily basis should set off secondary selling pressures that I would expect to last into October trade. Now we could reach the next target at 409.46 pretty quickly within a week or two. It could be an aggressive sell-off. This is the time of year for these things to occur. Or it could take 3 to 5 weeks. So I'd say by the end of October, and certainly possible by the end of September, if we close below the 437.86 formation, 409.46 becomes the next objective, and that formation can absorb selling really through the rest of the year. That is kind of a quarterly containment channel bottom, and from there we can turn onward and upward to new highs. In other words, retest that trend line at 460.43, rising weekly over the following couple of months of activity. Now, if we were to close, and I might as well put this worst case scenario out there because you never know what might happen. We are pushing into October, which is the season for big sell-offs. Not every October, but the big sell-offs over the last 30 or 40 years have often been this time of year. So if we were to close below 409.46 at the end of any week, then 362.46, here we come within probably another, well, depending on how soon that happens, it could be just another week or two. It could be an aggressive sell-off, 362.46, probably more like 3 to 5 weeks. 362.46, able to contain selling through next year, and that is our long-term support that can contain annual selling pressures. I'm not expecting to see it. My only condition for actually expecting it would be a violation of the 409.46 area. And once again, I don't expect to see that unless we close below 437.86 by that 1% margin. I'll do the math for you right now, and I'll throw it on the video once I edit it. A minus 4.3786 equals 433.48, actually. That is the 1% violation. So closing below 433.48. Now, if we close at 436 or 435, and you want to play the short side of the market through the rest of the week and even into October, you've got no strong argument from me. But if you want to be safe about this, in other words, technical clarity where you've got more certainty, you will wait a daily settlement at or below 433.48, followed by a weekly settlement below 433.48. the 1% violation of 437.86, and then you've got a clear bearish continuation or a sign thereof down to 409.46. Let's talk upside under the assumption we hold above 437.86. Once again, we can retest that 460.43 trend line over the next few weeks where we can top out through October trade. But if we close above the 460.43 trend line, the first target within possibly as little as 2 to 3 weeks would be 479.78. Net number is changing for every low we put out this week, so you can't hold me to that number, as if we continue to sell off from these price points, that channel structure begins to drop. That channel top begins to drop with new lows, FYI. But if we rally from here on Monday morning and continue on to 460.43 over the next week or two and then close above it, then yeah, that 479.78 channel top rising weekly becomes really a 2 to 3 week objective where we could top out on a monthly basis. But overall, closing above 460.43 at the end of any week should, I'm going to say over the next 3 to 5 months, yield that 517.54 long-term channel top. Well, that would put us probably into next spring where we could top out through summer and possibly the balance of the year. And that is all that needs to be said for this week's S&P 500 Spider ETF, symbol SPY, SPY analysis for the week of Monday, September 20th.